Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 6th of June. All right, strap yourself in. I'm going to go through a very detailed sort of Aussie RBA sort of release. Okay, we've got the RBA interest rate decision today, and it's a bit of a line ball decision whether they raise rates or leave them on hold. Now, just on this, before we get into that, though, having a look here, this is where you can sort of generally tell the market really isn't looking at the same things, and they're not identifying the same sort of movements, right? And by that, what I mean is there's no uniform trends, there's no clear direction on a lot of things. And that's because a lot of the news services, okay, and not to blame them, but there's nothing really going on. So they're trying to grab onto something tangible, which is always the Fed. Okay, are the Fed going to raise rates, or they're going to stay on hold, etc.? And like I was explaining with the US debt ceiling issue, the news services will go one day, yeah, they're going to hike. Next day, no hike. All this sort of crap, right? So just trying to generate interest to keep people reading the articles. Otherwise, it's it's a little bit there's nothing to do, right? And you get to send everyone home. So today, the RBA interest rate meeting is one of the key events. I'd say the Ivy PMI release later on today as well in Canada is also a key release. Now, what are we looking at? Well, with the RBA, right, we're looking for a hawkish pause. Okay, that could be a pause where they go, you know what, if things go up a bit further, you know what, we're going to have to raise rates. But let me just come back to the markets generally and explain what I was sort of discussing there initially about what the markets are doing, right? So just looking at the global markets here, okay, the dollar index, debt ceiling resolved, non-farm payrolls, if we get that too big movement, I still think the US dollar falls from here. As I was saying yesterday, it has come back down a bit, but like the price action on a lot of these instruments, like we saw that initial screaming move higher here on the equity markets, but that doesn't support obviously any chance of a rate hike. We have seen the Dow Jones sort of roll back a bit, gold sort of just cruising, the initial euphoria over the Saudis cutting oil supply sort of come and gone, right? Tells you the market must be fully loaded up with oil because it isn't doing much there. Crypto is getting belted. So, but generally across the board here, right, there's not an easy trade. Okay, I know the equity markets are up, probably looking for a pullback if anything. Now, if you come over here to the currency markets, right, just having a look here, it's tricky is what I'm sort of coming to. Like, look at the price action here on these moves following the US debt ceiling, and obviously the non-farm payrolls. Aussie's a little bit different, and it's a little buddy, the Kiwi, are doing something different to what the euro and sterling are doing, and some of it doesn't match up with what's happening on some of the other instruments. Dollar Swiss, well, it's still chopping about, but we do have a trend line close. And oil, well, I mean, dollar CAD is a little bit all over the place. It's found a bit of a home here at 134.45. We don't forget we do have the Bank of Canada rate decision this week. Now, looking across the board there, it looks like a bit of a dog's breakfast, right? And you look at you come in and you say, okay, we've got the Aussie interest rate decision today. So what's happening on the Aussie? Well, I tell you what, it's a little bit disconnected from the euro and sterling. And that always makes me a little bit unsettled. And when I come back and have a look at some of the key factors that influence the value of the Aussie dollar and the Kiwi and the CAD for that matter, is commodities, right? Commodities have been getting belted. And that's something of concern, I would think, for the RBA as they come into their decisions. It's going to be a big impact on GDP, and that can have a flow-on effect with employment, services, etc., inflation overall. Now, just looking at the markets as we start through the Asian session, okay, we've got a slight risk-off profile on the equity markets. Is that transpiring across the currencies? No, it's not, right? So this is what tells you straight away the markets are not acting uniformly. Like they are here on the commodities, but you sort of have to start digging a bit deeper to work out why the commodities getting hit, right? Then you've got, and here's obviously the calendar, looking at the cash rate. Now, the jury's out with regards what's happening here on the RBA decision, right? So most of the sites, I think it's like 67% or around 70% is what for a pause, right? 30% think they're going to raise rates, 70% no change. So that creates a situation where if they if they do raise rates, 70% of the market have got it wrong and they've got to square up and buy. Or if they do nothing, pause, then 30% have already factored in the hike, have to sell, right? So you're going to get some sort of initial movement. The real move will come from the statement. So, and this is where, you know, as I was showing you there initially, you get all this speculation, like a hawkish pause, which is, okay, we're not going to raise rates, but in the statement, they'll go, you know what, if inflation bounces back, then we may have to do something. Now, the key aspects here are just look at the data, right? The core data itself. Now, the situation with the Aussie, unlike all the other developed economies, their inflation numbers come out quarterly, right? So we have to wait, okay, till July for the numbers to come out. And that's, you know, we're in between meetings here. Is this number here going to be higher or lower? And that's the question what we're trying to sort of work out. Now, they did come out with a monthly CPI indicator a while back, right? This monthly CPI indicator. Now, if I was looking across all the numbers, right, let's just come back to that. And this is the benefit of, say, something like trading economics. I can sort of quickly drill into the data here and looking across the major fundamentals here, like the overview, and you go back down here, GDP growth lower, okay, unemployment rate a little bit higher, inflation was lower, okay, interest rates, well, still at 3.85%. Then you come back down, okay, and you're looking at, what was I looking for? The business confidence, pretty neutral, consumer confidence, a little bit worse than before, and et cetera, so forth. But a lot of these numbers, the retail sales figures a little bit lower there as well. That's the one I was looking for. So overall, like the numbers are getting softer. Now, did the RBA move based on this monthly indicator, which did show a bounce? Okay, that's where the 30% is coming back in and going, well, you know what? The monthly indicator, which is only relatively new, so it's not like the quarterly numbers which have been coming out forever. Is this the signal that the RBA needs? I'll have a look across the board there of all the fundamentals and think, well, I don't think so. They really need to see next month's data. And if it's consistent, well, then, you know what? They may have to raise rates. Raising rates too early could crush the economy, right? Inflation, everything else. So then you've got to weigh this up with what the RBA said in their last statement and in their minutes, right? So you come back down here, the last paragraph will have the clues here or the key to what's actually happening. And they're saying some further tightening of monetary policy may be required, okay? But, you know, and they're going to pay close attention to developments in the global economy, okay, trends in household spending and the outlook for inflation, so, and the labour market. So there's a bunch of data here. They're basically keeping all the economic numbers open, and they will do what is necessary to achieve that. Now, I don't think they've got the big number here to actually raise rates. Okay, I think the 0.25%, I mean, that's why there's less of a chance of it actually happening. I don't think it will, because they need to see this next number, which isn't, as I was saying, isn't due till July. And it's like, that's a bit of a pain in the backside, but that's where we are. They will act if needed. They're going to act on the monthly indicator? Okay, it's relative, as I said, it's relatively new. I don't think so. I don't think they will at this point. Now, does that make it easier to trade the event? Okay, so if I'm planning on a situation where they are going to pause, right? And this is where they don't want the market to get too carried away. They'll say, okay, we're going to pause, we're going to wait for the next data, but if it's strong, we'll raise rates, right? So Aussie may have a little knee jerk to the downside and then come back a little bit strong. Now, I've done a bit of detailed analysis here across the board, right? On my Aussie template, looking at all the instruments, like Aussie against the dollar, and then all the other crosses on 4 different timeframes, trying to work out exactly what's going on. Now, short term, Aussie US, it's been drifting lower. It has maintained its value, as I was saying, with euro and sterling getting hit right in the middle of the range on the dailies, you know what, and same for the weeklies and the monthly chart. So does it give us a really good look there at what's happening? Not really. I'd love to see it near a trend line on the dailies to see if it's going to break outside the recent range. Now, if I come into the crosses, okay, you've got the Aussie's already left the building on a few things. Okay, Aussie against the Kiwi, Aussie yen, Aussie Swiss. and then Euro Aussie, Sterling Aussie, and Aussie CAD, right? Although Aussie CAD's come back to sort of where it sort of broke down. And don't forget, CAD is also in play. We've got the Bank of Canada, I think, on Wednesday. So you're looking at that doesn't really sort of give you much hope for a nice, easy trade, right? So you come in here. I'm starting to look across the various crosses. Aussie yen. Okay, well, it's just hitting the cloud. Not really a lot there. I mean, it has been drifting sideways since, well, Q2 22. Slight uptrend, if anything. You can see there clearly on the weeklies, and the monthly is not doing a lot, right? And all I'm doing is at this point is just sort of scanning across, trying to find out where the action is. Now, Aussie CAD, as I was saying, you probably want the second part of the equation, and Bank of Canada aren't expected to raise rates either. We could have a pause here, and Aussie CAD on the daily charts has been sort of drifting lower, okay? And so that would sort of really, if I'm looking at the hourly charts, looking for a rally here to potentially go short. As I said, we've got the IVP, Canadian IVPMI later on. That may be a chance. Once we know what the RBA does, you've got half the equation. The answer's in the next piece of data. So maybe the Aussie CAD could be a bit of a wait. Okay, Aussie Swiss, well, it has sort of driven to the top side with Euro falling. Okay, and obviously the Swiss falling as well. On the dailies, it's heading lower, but trading the Swiss on the crosses is a little bit tricky ever since January 2015. But coming here to Aussie Kiwi now, for a lot of new traders, you probably wouldn't know this, but the Aussie was forever, okay, and I'm talking from the 90s through to the early teens, up around 125, 127 all the time. Now it got belted and it's been down here for some time. I don't think there's a lot of disparity in the Aussie and Kiwi economies at the moment, but the Kiwi economy is small. They've overcooked interest rates, where the Aussie, they may have to maintain a stronger interest rate move. So it's already left. So there's no easy trade here on the hourlies or the dailies for that matter. Now, does it go back to 125? You'd really need to see something very negative out of New Zealand to get this moving 10 cents higher. So once again, Aussie Kiwi, yeah, it could be a trade on the release of the data, okay, especially if they raise rates, but no easy trade there technically. Euro Aussie, okay, well, this makes a lot of sense to me, right? The ECB aren't doing anything, weak numbers, it looks terrible. Aussie raises rates, it's going to keep going. You do have an entry level here on the dailies, but it's like 150 points lower, right? That's miles away. So, and on the weeklies, Euro Aussie, well, it's still sort of going up. Okay, so Euro Aussie, well, makes a bit of sense, but there's no clear, easy entry. Now, one I do like is Sterling Aussie. Now, Sterling, the inflation's out of control, right? And the Bank of England have got their hands full trying to maintain this. The Aussie data is weak, right? As I said, they want to see this next inflation data. So I don't think they'll raise rates, but they'll say, you know what, we will if the next data is strong. So, but if that next data is weak, I can see Sterling Aussie really bouncing, right? The dailies, it's going up. We've got a level here on the weekly as well. And also it's about to break higher on the monthly charts. Now, when I was at Citibank in London on the trading team there, you know, I was back at, back below here, Sterling Aussie was up around 3. In fact, when I came back in about 98, 99, it was at 315. I know, because I cashed in all my pounds for Aussie dollars. I couldn't believe it. It was like the biggest payday ever. So down here at 187, right? It's sort of like the Aussie Kiwi. It doesn't make sense. This thing really should be up around 270. So what do I think? Well, I don't know if there's a trade here initially, because I don't think they're going to raise rates, but next week or shortly, I'm going to be keeping a very close eye on Sterling Aussie, because I think we could see a significant move higher, especially if the next Aussie inflation number is weak. That will go a long way to saying that we've topped out inflation in Australia, whereas sterling's still going up. And we can see, like on the short term, okay, on the hourlies, we've seen Sterling Aussie get hit. This is almost an opportunity, because I think this move is overcooked and overdone, right? I think, if anything, it should be back up here. But, you know, Euro and sterling have been getting belted against the dollar. The Aussie's been holding up. Now, this So there we are on the charts. Now, as I was saying, Aussie's been holding up, and I showed you there before the commodities, right? The if I just come back to the main page here, get the right screen up. Okay, this doesn't make sense. You'd think the Aussie would be getting drilled here, right? Because of the commodities. Okay, they are down significantly. And if I actually come back to this chart here, come in here, let's come across Aussie dollar, because I was looking at the commodity prices, right? And they are getting absolutely mullered. And where are we? And like they're off like sort of 20%. Actually, I was posting this up on the on our Discord channel for our funded traders, and just having a look here. Where are we? Okay, this one here, right? Australian commodity prices. Okay, the last 3 months off 6.9%, 19%, minus 22%. This is the Aussie bottom line, right? If the excuse the French, if the arse falls out of the commodity market like it has done, well, I tell you what, that's going to have ramifications for the Aussie economy. It's their biggest earner, right? GDP will massively drop off, and that'll have flow-on effects through the economy. So that's something that I'm sort of concerned about, and that's where I think sterling Aussie could be the longer term trade. Maybe not today, but definitely longer term. So when you come back to it, we're looking at I don't think we've got the final answer with regards what's happening on the interest rates today. So what does that mean for us? Well, it means we've got to wait. But I think a pause with a hawkish tone from the RBA may keep it sort of stationary, but everything else is pointing down. So when I look at the Aussie, I'm sort of starting to think that we might see a move after this to the downside, right? Because that's, if they're not raising rates, all the numbers are weak. All they need is that last number from the RBA next month, and then or just over a month, and then we'll see the answer. By then, they may have already started factoring in a weaker Aussie. Okay. Now, if they raise rates, what does that mean? If they raised rates, they'd say, that's it, we're done. I think almost if they raise rates, we'll get a little pop higher. I'd almost be looking to sell to go lower because of the commodity prices and the fact that euro and sterling are lower. It just, like, the Aussie isn't the strongest currency on its own, right? And its supporting factors, commodities, don't really support a higher Aussie. Okay, so interest rate differentials, well, yeah, sure, but they're going to be short-lived. I think we see, if they do raise rates, we see a spike higher and we see it lower. Now, those traders who don't mind a bit of a flutter, this is one of those situations where 67% say think there's going to be a pause, right? And 33% think there's going to be a hike. We might get a bit of a spike up, or we might get a bit of a move down, okay, as there's balancing of the accounts, which does set up traders for a potential OCO if you're that way inclined to look for a small trade, at least tap some cash into your account, okay? Because if you know if they raise rates, it's going to go up 30, 40 points. If they don't raise, it's probably going to go down 30 or 40 points, and that's where we are. So anyway, guys, that's it. There's a short-term trading opportunity there, a little bit of extra risk on those OCO trades, that is for certain. But when you do your analysis and you are looking at the major instruments around central bank action, okay, you need to go into detail with what's happening and base your answer on what is actually coming out and what has come out, right? That's the idea of tracking these numbers to try and work out what they're doing. The actual statement tells you exactly what to look for. Okay, now they're looking at household spending and a whole range of things. That's great. Keeping an open view across the economy, which is generally what they do, unless everything's out of control, and that's when they'll just zone in on inflation. So I think most of on the balance of things, the numbers tell us that they should be on hold. Okay, and we're just going to wait. Is there a trading opportunity on that? Well, most of the market, say 67, 70%, expect no change. So you may see a little drift lower, but you know what? That's fully factored in. The surprise, well, generally would be probably a hike, but that could be seen as massively negative. As I said, you might get a spike higher, but everyone will go, you know what? The market's already cooked. Now you've really overcooked it and everything's going to drop. So that's where we are, guys. Keep an eye on that. Hopefully that gives you some insight into how to analyze the markets around central banks. This Cat Ivy PMI number coming out later today, obviously in Canada, is probably an easy proposition, okay, because it's just one number, and then you come back to trading easy opportunities. So keep an eye on that as well as we go forward. And then, before we know it, we'll be into Wednesday and we'll see how things are rocking and rolling. If you have any questions, jump on the Discord there. Happy to answer your questions around this and really sort of piece it together so you know exactly what's happening and you're confident with the trading choice you make. All right, guys, all the best. Cheerio.